What's up? Good morning, everybody. Welcome in. Hope you guys are doing well. Hope you guys are having a good week. Let me know in the chat where you guys are tuning in from. How's your week going for you? Good morning, Black Zero Investing. Mr. Simpson, good morning. Welcome in. Good morning. Got the iced latte cooking? Mr. ND82 from Germany, welcome in. Good morning, George. Denise, hello, welcome in. Little B, good morning. Welcome, Germany too. Pakistan, welcome in, welcome in. So we're gonna get into the analysis today, gonna get into some order flow, gonna get into some candle charts, price action, lots of stuff, a lot of downside pressure in the market right now, a lot of geopolitical tensions, economic uncertainty, a lot of downside pressure in the market that we haven't seen in some time. Welcome in, good morning from Portugal, Ethiopia, South Africa. Good morning, everybody. Nigeria, welcome in, welcome in. Yeah, if you guys haven't already, make sure you check out the link to sign up for Chart Academy. Gonna be some amazing content released there for free, so make sure you check that out. Good morning. All right, so gonna get into the analysis today, go through things, but first, a word to our sponsors. Prop Firm Trader. Make sure you guys check out the discount links that are shared here in the graphics if you do use these products to get the best discounts. We're also going to have some giveaways today. Apex discount code there as well. Let's see, let me check with the team. We've got Apex, Alpha Capital, and TradeZella 3-month all to give away today. Make sure you're participating in the chat. Shout out to TradeZella as well. Use code CF20 to get a discount there as well. Very important to track your data, guys. So make sure you check out these links. We're gonna do giveaways. Make sure you're participating in the chat. Members that participate, ask good questions, will be selected by the team in the back end for some of these giveaways. Again, we've got Apex account, Alpha Capital account, and TradeZella 3-month account. So amazing giveaways here as usual, guys. Now let's get into some analysis and some charts for the day. Germany, again, tuning in from Germany. Got a number of people from Germany today. That's cool. That's cool. I spent I think 1 or 2 nights in Germany on my way to Iraq when I was in the military. It was nice there. Wish I got to enjoy it more, but it was just a layover for me. Ramstein. All right, so let's get into the charts. So if you guys notice, I kind of split it today. So we have candle charts to go through some analysis and watch price action, and then my primary order flow analysis tool, which is Bookmap. The heat map here on this shows me resting orders in level 2, like passive buyers, passive sellers. And then the bubbles here are showing me the delta of aggressive buyers or sellers, just in case you're new to analyzing order flow or analyzing it with Bookmap. Quick overview for you guys. Now the candle charts, we'll get into some analysis and things to start the day. So let me know in the chat how you guys have been trading recently. I want to hear from you guys. $156% this month. That's amazing. That's probably an anomaly. TradeWit J-Rock said it's tough. Thanks to Chart Fanatics. Pretty bad emotional losing streak. Choppy, no follow through, been scalping. Pretty unanimous. Patience is key. Yeah, absolutely. Took good trades, got out early. Very well. Charts are very bearish. Volatility has also given lots of opportunity too. Struggling with over trading, somebody said. Right? Interesting, interesting. Missed opportunities, but doing decently well. Struggling with over trading, hoping for better next week, right? So if you guys, I think many people fall into this boat right now. If you guys have been struggling with trading recently, 2 wins this morning, shutting it down, that's amazing. Not bad, patience, little above break even, right? If you guys have been struggling with trading recently, listen up. So for many people that have started trading in the last couple years, the market has been pretty much endlessly uptrending, right? So you could basically play almost any long setup on almost any name and be up for the most part, right? However, look at this 3-week chart over the last 3 years, not 3-week, weekly chart over the last 3 years. You can see the vast majority of the time the market has been uptrending. There's been very few times where the market has been sideways or downtrending over the last few years, right? So if you're new to trading and you're struggling right now, you need to identify that the market conditions have shifted, right? It went and struggled. We saw buyer exhaustion many times over a period of a few months at the all-time highs, and now we're downtrending, but we're not cleanly like waterfall downtrending. We're kind of downtrending in a channel, right? So a lot of people go through phases where they do really well in a certain type of market condition. They're trading a certain type of setup, but they don't know how to adapt, and they end up giving it all back and blowing up, struggling to identify over trading because they're trying to force things that were working before but are no longer working, right? That is not a bug in the market. That is a feature of the market, right? This game, welcome to trading. The whole game of trading is being able to identify things and adapt, right? The only constant is change here, right? MLB baseball season just started, so I'm going to give you guys a baseball example, right? If you're a very good hitter, right, when you get pitched a fastball right down the middle of the plate, you're looking to turn that thing and smash it to the fences, right? You're looking to absolutely obliterate that baseball. It's a good opportunity. It's coming right down the middle of the plate. However, if you apply that same approach to a pitch that's down and away outside, it's a strike, you got to swing at it, but it's down and away, right? Slider down and away. If you try to turn on that thing to hit it over the fence, you're going to strike out, right? You have to identify the conditions, identify the opportunity. Maybe that's an opportunity for an opposite field base hit, right? The market is like the pitcher, right? Giving us the different pitches. It's our job, being the hitter, to identify the conditions, identify the opportunities, and capitalize on what's presented. That doesn't mean forcing necessarily the same thing in all conditions, right? That doesn't mean you completely 180 change your strategy in all types of market conditions, right? You need to adapt certain things, right? Maybe 80% of your strategy stays the same, but 20% gets tweaked, whether it's trade management or your entry style, your risk management size, right? Position sizing, target sizing, things like that. There's 20% of your trading strategy that likely needs adapted and adjusted to different contexts, different market conditions, right? So for the majority of the time, the last couple years, we've been in a pretty solid uptrend. There's been very few times where the market has been sideways or downtrending, right? So if you're new to the markets in the last couple years and you're struggling significantly right now, make sure you're tracking the different changes that the market goes through in different market conditions and how you can adapt your strategy to that. That's where it's extremely beneficial to have tools like TradeZella, have other AI tools that you can analyze your data. And it becomes more useful when you're actually tracking certain things in your data, right? And then you can leverage AI tools to help you analyze what's working, what's not, what needs adjusted, what type of levels are working, what type of entry confirmations are working, what type of trade management is working. It's not always the same. Like I said, the majority of your core strategy should stay the same. You shouldn't be strategy hopping, but your 20% of your trade management, maybe risk management things need tweaks for different conditions. And if you try to constantly apply the same thing in all market conditions, you're likely going to go through boom and bust cycles where you get slapped when that works against you. Does that make sense, guys? So it's important to start every day with the big picture. I like to start with weekly charts, daily charts, 4-hour charts. Even as an intraday trader that I am, right, for the most part, I do swing trade when there's bigger opportunities at hand, right? When there's a fastball down the middle of the plate, right, I'm taking a big swing at it. When there's a slider down and away, I'm taking, you know, an opposite field base hit off of it, right? So identify the conditions. For me lately, right, the conditions have been not home run conditions. The conditions have been opposite field base hit conditions. And if you're trying to, for me personally, with my strategy, with my system, the more I try to swing for home runs in these conditions, I've been either striking out or taking break evens. For me, it's been important to identify higher time frame key levels, right? And when I find a good pitch, it's a strike, but it's not necessarily a home run pitch. I'm trying to just take a scalp on it, an opposite field base hit. So taking a look at the weekly time frame here, let's get into the analysis today. We got about 15 minutes to the open. You can see we started out the week with a really big tape bomb based on Trump's statement Monday morning in the pre-market. We'll get into that on lower time frames here, but let's take a look here. I like my snipping tool so I can kind of just draw on the charts. Couple key areas that I've had my eyes on. One is these prior lows here that were kind of around there, right? We've since broken through that. We actually had a pretty nice break and retest under that. We'll take a look on lower time frames here in a minute. This is ES futures, by the way. Right now, just looking at a weekly chart. So looking at this, you can see this channel we've been downtrending in. Whoa, that is a huge, hang on. Right, so lately we've been in this downtrending channel that we've seen here over the last few weeks, 1, 2, 3, 4, 5 weeks. And look at this, when was the last time we closed 5 red weeks? I was like over a year ago, actually March last year. So still want this a little smaller. So we're in this downtrending channel. The highs and lows of it have been respected. Again, we haven't had that super accelerated like waterfall type sell-off like that. It's been almost like controlled demolition. We've been working our way lower. However, you know, bulls are aggressively defending at the lows. We've seen some pretty aggressive pops within that. But again, Monday started off with that massive tape bomb and it came all the way up to there, boom, top of that channel trend line, and respected it very well. And we've been rejecting and downtrending all week since then. Now, what do you know, coming into Friday, we're coming towards near the lows of that. We're still a ways off of it, but we're coming near the lows of it, right? So within that, we had a huge tape bomb that was not super tradable on Monday morning, all the way into the highs in like 15 minutes, like 200 something points. And then since then, we've been grinding our way lower pretty much all week. Now, yesterday and overnight last night, we kind of accelerated that breakdown. And now that puts us in a little bit of a tricky position, at least for me, right? When we have a extended overnight directional move like this, especially coming into the lows of an area that's already kind of bounced, it makes it a little tricky for me personally. Makes it those conditions, that location coming into the market open here this morning makes it a little tricky for me. So we'll take a look at some lower time frames, but really quick below this, actually let's take a look at the daily chart here. All right, so let's take a look at this daily chart. Again, ES futures, S&P 500, analysis applies, whether you trade options, futures, whatever. We have this prior low here from Monday where we started out, right? And then you can see we had that massive day all the way to the highs of that channel. Boom, look where that got respected, right there. No coincidence, right? So we've continued to see a lot of aggressive buyers defending lows, but also a lot of exhaustion from buyers at highs. So that's why we've continued to respect this channel. Now, a couple key things that we're coming into. One, which we already kind of just peeked our head under right here, is this prior low from Monday overnight. Sorry, Sunday overnight going into Monday morning around the 64.80s, 83s. Right, so that's a key spot, prior low. That's where we started out this week, or that's the low of the week. And we've kind of already had a nice break and retest under a key area within the middle of this range, which I'll point out here when we get to some lower time frames. But context is we've kind of already extended this move down quite a bit. Yes, I'm not saying this is the bottom. It can definitely extend further. However, I'm very kind of cautious shorting into the lows here, right? Especially this area here. We've got prior lows down here, just a little bit lower, that also kind of aligns with this trend line. And that's also around 6,400. So for me, that's the next big spot I see to the downside if we do continue to the downside. Within that though, we have this whole area where this market really consolidated. It based quite a bit here, right? Again, this is a daily chart. You can see all the basing we did here before we made that next strong move out of there, right? So we're in a pretty big basing period here. This was, I guess we could say this was a demand zone, right? The market based and then rallied out of here. It rallied out once, held a retest, 1, 2, 3, 4, quadruple bottom here, right at those lows. So we'll see if we drop down here today. If the market gets a strong reaction and fails to break down that weekly low, we may get a pop back towards the middle of this channel. That's something that I'd watch out for. Drop that on there. To the upside, the main spot near term that I have my eyes on is this area kind of in the middle of the channel, which was also around these key levels around 65, 60 to 70. We had a gap level there as well. We had a really clean break and retest under there. Fortunately, overnight didn't catch it, but really clean break and retest. Yesterday, I was looking at that spot to hold for longs, which we did, right? You can see the market popped off there really aggressively. Now we broke it down. So we popped off there initially, now break and retest under there. That's the context. NQ, I'm not looking at as much right now actively, but NQ has flipped relatively weaker. It's kind of made a more extended move down. All right, let's take a look. 4-hour chart. All right, so clearer picture here, 4-hour chart. You can see this is that key area where we had a gap just over those highs. And we had first we had a nice bottom reversal off of it yesterday. Check this out. So that was that tape bomb on Monday morning. News, Trump made a statement. Market pulled back, held that spot. Again, this was a gap level, overnight highs there, low there. And then we rallied aggressively off of it. We then respected this zone that I was watching here, rejected off of it. And now we had a nice break under that retest overnight and now continuation. So we've already had a really nice break and retest under a key zone coming all the way into the weekly lows near the lows of this channel, right? So that's what I mean. This is a little bit of a tricky location. We've already extended this move down. We're coming into prior lows, channel lows, some things that could get defended. So it's a little tough for me to look to chase shorts down here at this time. If we just keep dropping, it may be a situation where I just stay cash and wait and see what happens. So a couple things that I'd watch out for here this morning. Clean this up. Couple things that I'd watch out for here this morning. If we do get a continuation drop today, I'd watch to see if we possibly get a reaction off that channel low, right? I'm not saying that's the bottom. We could just break right through there, but maybe we get a strong reaction there. I'd take it long with good risk to scalp it for a pop back up, into here. That's something I'm watching out for. Also, these lows here, if we fail to break that down, recover strongly, I may look to scalp that back to the upside. That's kind of going against momentum here, not the best quality, but it's something I'd potentially look to scalp if I see really good confirmations here. Now, if we pop, I'm looking at kind of this area here, just on the 4-hour chart, where we see this kind of overnight basing that we kind of based and dropped from. If we pop up here and reject under there, I may look to scalp that to the downside. If we get really strong somehow and recover back above there, I may look to take that long for a break and retest, recapture above there, back up into maybe 6,600, 6,616 area. I don't love those setups so much either, because they're kind of in the middle of this channel, right? If we look at this higher time frame channel, the best quality thing in these conditions by far is fading the highs at the top of this channel, right? Because it aligns with the downside pressure in the market. It aligns with the channel technical location, fading it, right? Playing too much in the middle here is dangerous. Also, trying to catch a bottom at the lows is dangerous. Right? So just be aware of that context. By far, fading the extremes at the highs over the last few weeks has been the A+ move. Playing in the middle of the channel, you can scalp some opportunities there, but recognize what it is, right? Dangerous. Catching the absolute bottom, yeah, we've had aggressive moves off there. We've had aggressive moves off the bottom multiple times, but a lot of times these have been kind of news driven. Unpredictably, Trump makes a statement, something, boom, the market just explodes. Kind of tough to trade. So those are some things I'm watching out for here. This morning, you can see we had a pretty extended move. So looking at the 15-minute chart, we have a clean view of this zone, right? If I go back to where I marked this was that gap zone where we had those Asia highs, overnight highs there, and then tape bomb blasted through it to start the week. This was a key area that I was watching. You can see once we pulled back into there, boom, we had a nice rally off of it. Now we broke through there, boom, we had a nice break and retest here. Ignore this candle, that was the weirdness at the close yesterday, but had a nice break, retest under there, and continuation to the downside. Now we've kind of extended that move down overnight all the way into this weekly low. Kind of tough for me to chase. Like, I mean, where's my risk if I short here, right? Tough. So we'll see what happens. Market opens in 5 minutes. 10 a.m. we have Michigan consumer expectations. We have some news at 10 a.m. Let's see. Yeah, Michigan consumer expectations, inflation expectations at 10 a.m. that can spark some volatility. So we got a picture overall where we're at. You can see under the weekly low into that channel low, kind of a tough location to look to short into. This is an interesting spot to watch as well, kind of the prior day lows here at the close. I would watch kind of this whole area here between this area at the close and those overnight lows there. Kind of would watch that area. Oh, let's look at the volume profile. Yeah, so we got a little bit of a low volume node there on the break under that overnight low around 65.10, 65.08, 65.10. Forgot to mention volume profile here. Let's take a look at the volume profile. All right, so large volume built here. Break under those lows there. Right, we have a bit of a low volume node here. This would be a key spot to watch as well. Right there, if we already kind of broke. See, the problem with a lot of this stuff is like that this is already played. We kind of broke through there. We retested there, continued. So it's like, it's kind of extended. It's kind of already played. And the near term, actually, you know, if we pop into there and fail, okay. Especially coinciding with under prior day lows there. On the flip side, if we recapture there and recapture prior day lows, we could see kind of an aggressive pop back towards where all this volume was built here, that value area high right now. That's another thing that could potentially watch out. So a few different scenarios possible here this morning. Kind of need to watch and see what develops. I'm also very okay with just staying cash today. It's tough location. We've already extended this move to the downside, coming into the weekly low. Personally, you know, it's definitely a day I could see myself staying cash if I don't see anything really good. So on the order flow here, look at all this aggressive selling into this on the heat map. This is interesting. So a lot of big passive buyers stepped in here in the pre-market. So after 8:30 to 9 a.m., look at on the heat map here, all these big passive bids stepped in. You see all this big aggressive selling into them got absorbed, right? So a lot of absorption down there. And that also aligns right there at kind of that weekly low around 64.83. So a lot of absorption there. Point of control has shifted this morning. It's down here at these 64.93s. So that was a lot of absorption. Obviously the point of control shifted down here. This blue line is my anchored VWAP from February. You can see how we've kind of respected that. I've been seeing that a lot this week is pops into this failing. If we recapture that, that could be something else. Do I trade crypto? No. Pre-market, I'm usually referring to like early in the New York session. So like between like 8 a.m. and 9:30 a.m. is what I usually refer to. Before the 9:30 like cash session opens. I primarily trade, here's the 9:30 bell. Primarily trade between like 9:30 and 11. Actually, I really don't like to trade in the first 5 to 15 minutes. So I trade primarily between like 9:45 and 11. Someone blew up their port. No, I pretty much, you know, for years I went through phases where I pretty much traded all day during the New York session, traded afternoons, never really, you know, I did trade pre-market often early in the morning. When I had a job, would trade earlier in the morning before. But now the longer I've gone on, the more I really just focus on, you know, A+ opportunities in that first 60 to 90 minutes of the New York session. So like 9:30 to 11ish. And outside of that, I just, most of the time, it's just not worth my mental capital. There's absolutely opportunities. I'm not saying you can't trade. If you have a time window that you can trade, that's the beauty of the futures market. You can trade at certain time windows. But for me, I've just noticed like I have the most frequency of A+ setups in this time frame. So I just look to trade that. And, you know, the important thing is not like really overextending yourself too. I think you only have so many minutes that you can commit like a high level of focus, a high level of, you know, strong selling here. So we rejected that anchored VWAP, right? You typically, most people have like 60 to 90 minutes where you can really commit, having good focus, good risk management, following your rules. And the more you extend yourself beyond that, you get mentally fatigued, likely to make poor decisions. So market tried to pop into near that 6,500. Ton of aggressive selling came and extended these lows here again. Look at that big surge in negative delta here, right there. It's interesting. Massive surge in negative delta there on the break under those lows. So again, kind of tricky location for me to chase shorts down here at this point. Also kind of tricky for me here to try to catch a bottom just yet until I see some really good confirmations. I'm not trying to be a first buyer down here at the lows. I want to see kind of a major shift and buyers really, big buyers really prove their shifting structure, taking control. Don't really want to be a first buyer down here. Also don't really want to be a seller down here chasing the lows, continuing lower. It's possible. It's just not, it's not great quality, great risk versus reward for me. It's way too easy to have these aggressive pops and stop out late shorts. What time frame do you guys normally like to look at? So my trading is mostly based on order flow. Let me know in the chat what time frame you guys normally like to watch price action on, for those of you that primarily trade price action. For me, if I'm watching intraday charts, I generally will put on like 15 minute, 2 minute, 5 minute maybe charts for just kind of intraday price structure. 5 minute, 1 minute, 15 minute entry on 1 minute, 1, 2, 5. Seems like a lot of people are in that range. Yeah, I typically look at like 2 minute and 15 minute charts for just kind of intraday price action structure. All of my trade setups and execution is really just based off order flow. So I'm not really looking at candle chart patterns or anything like that, price action, but I do kind of keep an eye on overall like price structure. 5 minute execution, 30 minute volume profile. Yeah, I like 30 minute charts and volume profiles intraday as well. This thing's just bleeding off, man. Super heavy. VX is super elevated. I don't have much here, guys, for me. So let's take a look. VX is popping off. So going up for prior day highs. We got a double top right around 27.75. It's at 27.15 right now. Crude is elevated as well. Take a look here. Crude has been kind of inverse to the S&P, right? When crude has been popping because of the Iran conflict, it's been putting downside pressure on the S&P and obviously VX as well. So you can see VX elevated, going for prior day highs up here, 27.75, 28 area. Crude held this area here, elevated again. So those are going to continue to add downside pressure. But again, it's a tough location for me to like initiate shorts all the way down here. At least for me personally, for the setups that I look for. Which broker platforms do you use? I use Trade-Evate, Sierra Chart. My brokers are connected to those. I use Thinkorswim for charts, and I use Bookmap. I use order flow analysis with footprint charts on both Trade-Evate and Sierra Chart, and I use Bookmap for order flow analysis as well. Reagan, I'm not sure the cost for you, your area, location, whatever. But if you send me a message on Instagram, I can help take a look at that with you. Some aggressive buying coming in here, but not too significant yet. We had this area from the pre-market where we saw a lot of absorption. Now it's even bigger. Selling has come in down here. Look at this negative delta, 8,000 lot negative delta, breaking the weekly lows here. Right, that could either become a really big trap here, and this thing could get nuked. Like these sellers could get nuked, and we could shoot back to the upside again, or we could have a massive downside continuation today towards 6,400. Either way, it could build, right? If this turns into a trap, all these sellers off the open here, you know, these overnight sellers could get nuked as we pop. NQ, I didn't talk about this. That trend line, that lower channel trend line on ES is a bit lower, but NQ is kind of coming into that already. So I'm kind of looking at this channel here on NQ. This is a 4-hour chart on NQ, similar channel to what ES has been doing. And you can see how that's already kind of coming into that area. So if NQ bounces aggressively here, then that could, if NQ bounces aggressively here, that could take some pressure off ES extending lower here. I'm looking at NQ now. Yeah, NQ is having a pretty nice bounce right now, pretty aggressive bounce. ES is too, but not looking as significant as NQ. Let's take a look at NQ here. Yeah, I can see that nice extended dip here. Pretty aggressive here, kind of like this area. If we hold some kind of a pullback down around like 75 to 50, might be interesting on NQ. ES is popping, it just doesn't look very energetic yet. A lot of downside pressure here, so I'm pretty, you know, I like it. It's got potential for a quick scalp off this bottom, but you know, I'm also very kind of risk averse to trying to catch the lows here. That's an interesting question. Tendra asked. They said, what would you suggest to a newer trader? One strategy playbook that can be done on multiple instruments, or have a multiple strategies, but just on 1 or 2 instruments. That really comes down to your personality. And both of them have to do with being an expert of one, right? Either an expert of one strategy on multiple instruments, or an expert of one instrument with a few different setups. And that's more where I lie, right? I have a few different ways of few different playbooks, right? And I primarily trade the indices, ES and NQ, the S&P and the NASDAQ. I would say the earlier you are in your journey, less is more, right? So I would say the more you can lean towards less setups, just master them, and less instruments, right? 1 or 2 setups, 1 or 2 instruments, and really master that, right? Develop a positive expectancy with that. And then as you get to know yourself, maybe if you seem to just have a particular knack for a certain playbook, maybe then you look to expand your instrument list of what you look for that to trade on, right? If you seem to just have a knack for a certain instrument, you get to know it really well, and you have a few different playbooks. It really just is about you and what you do well. So I can't answer that for you. I would just say less is more starting out, but explore what, with small size, right? With money you can afford to lose, explore what works best for you and what's a match for your personality, because that's what's going to have the biggest factor, right? That's a good question, though. Be interesting if VX does pop up here over these prior highs around 27.75, if it continues or wicks back down. Same thing kind of on crude up here around 101.69. Giggity. 101.69. There's a kind of a key resistance spot, double top there on crude, and 27.8 on VX, also a double top kind of key resistance point. So if we do pop up there and that aligns and we start to see it fail up there and that aligns with a key demand spot on ES and NQ, that might be a more interesting bottom reversal. If crude and VX get above those things and are strong, breaking and retesting above, going to be a lot of downside pressure on the indices, I think. Tendra, can you share some strategies from your playbook entry models? If you check out my Instagram, I post a lot of trade recaps there with pretty darn detailed entry models, confirmations, locations, etc. I'll also have more coming on YouTube, so you can check that out for free. So kind of battling here, right? Kind of a grinding battle here. I think a lot of people are probably like me, where we're quite cautious to chase these lows and also quite cautious to try to nab the bottom. We have that 10 a.m. consumer news coming out. We just broke over the 20 EMA, keeping an eye on that for kind of intraday control. There's been a lot of aggressive buying since like 936. Let me show you guys a different view here. Let me kind of zoom out on my footprint chart to let you see what this looks like. Different way of viewing it than Bookmap. Different way of viewing the order flow. So in my footprint chart here, I'm looking at the delta between aggressive buyers and sellers by the tick, which we see on the left-hand side, and on the right-hand side, I see the volume. So, and then at the bottom, I'm looking at the cumulative delta for each of these 5-point range bars, right? So you can see in the first 5 minutes, there was a lot of aggressive heavy selling into that. And then since then, the delta has really flipped. And we can see just a steady amount of aggressive buying coming in. Look at all the blue, just a steady amount of aggressive buying. Now we just popped over that 20 EMA there too. A lot of aggressive buying surged when we just came over that 20 EMA, right? So just something I'm keeping an eye on here. Again, I liked what I was seeing down here with this aggressive buying. I'm just kind of a little bit trigger shy of trying to catch the low. And we also have that news coming out in 13 minutes. So kind of zooming out and looking at the structure here, we saw this absorption start to take place in the pre-market, kind of a little pump fake under it. What's kind of interesting to me that's developing here is if we like recapture and hold this prior low around 64.83, which also aligns closely with where we were seeing all this absorption. So this is becoming a little interesting. Looking at where we saw all this absorption here around that low, we kind of dipped under it in the first couple minutes, and now we're recapturing it. So if we recapture this, also this anchored VWAP here, if we recapture this, pull back and hold, be kind of a more interesting scenario for a potential long setup. Brandon asked a good question. What would you say are top 3 ways to see how price is getting weaker for a reversal on Bookmap? So generally speaking, there's some things that I like to look for, and I'll just kind of screenshot this and I'll talk about it on the side here while we watch this. But there's a concept from Wyckoff, Studies in Tape Reading, talking about identifying volume and the size and aggression of participants, right? And he talked about it in a really nice way of seeing which side the aggressive participants are weaker on and which side the aggressive participants are stronger on, right? And meaning like the aggressive participants with large size are showing us the business end of the arrow where price is being forced, right? Driven by large aggressive participants. And the weaker, less aggressive participants are showing us the kind of the non-business end of the arrow, right? The feather end of the arrow, right? So understanding that concept of effort and reward, right? Something that I look for coming into a key spot, right? As the market, say, downtrends into a key spot, I first start to look for large aggressive selling, which does not move price lower, right? That's absorption, right? If we see a lot of aggressive, large size aggressive selling failing to move price lower, then I see them as potentially getting trapped, kind of like what we saw over here. Then I like to look to see aggressive participants start proving themselves and increasing volume the other direction, right? Increasing volume the other direction, right? And then what I like to see is on subsequent pullbacks, decreasing size from those aggressive participants, right? So when I see that, then I'm starting to see a flip where the arrow of aggressive participants are showing me, one, these participants are absorbed, potentially trapped. Then I'm seeing aggressive size participants starting to show me the business end of the arrow, and weaker participants showing me the feather end of the arrow. So in this example here, when I start to see large absorption followed by aggression and then weaker pullbacks with smaller delta from sellers, then I'm seeing, okay, feather end of the arrow here, business end of the arrow here. So if I see selling at the lows look like this, large negative delta, smaller negative delta on subsequent pullbacks, that tells me they're getting weaker, right? That was a long way of answering your question. However, it's important and imperative to combine that with market context and overall analysis, right? You don't want to just overanalyze stuff like this on a lower time frame order flow and find yourself positioning yourself against a strong directional move in the market. Good morning, Go Harali. Welcome in. So you have to understand when we're looking at order flow, this is a key concept of tape reading, right? Tape reading and analyzing the order flow is helping us identify the immediate trend. What is price doing right now, right? That can help us get very, very precise entries in reading the market auction right now. What is happening? Who has control right now, right? However, you don't want to overanalyze that on a microscopic view and being like, oh, right now this person has control, but it's really just kind of a relief bounce within a larger, stronger directional move that's with the theme of the market, right? So it's best to understand that reading the order flow, reading the tape is providing you a microscopic view of who's controlling the auction right now, ideally so you can position yourself with the directional theme of the market. Or if there's a lack thereof, use it to fade reversals for a mean reversion. What you don't want to do is find yourself looking at the order flow under a microscope, trying to find a reversal against a strong directional theme move in the market. That's a recipe for a lot of paper cuts. Good question. Good question in the chat from, who was that? Brandon Negri. That's a good question. So 7 minutes till that 10 a.m. news, guys. If you haven't already, if you enjoy the immense amount of free value you get from the Chart Fanatics live channel here, make sure you like, subscribe, smash the like. That helps us out a ton. That's all we ask for the free value, free giveaways, and everything else that you guys get here. What's up? Riz in the chat. I've been seeing Riz's stories lately. He's been smashing some swing trades. Thanks for tuning in, Riz. Hope you brought your notebook, brother. 11 p.m. in Japan there, bro. Go to sleep. Go to sleep. That is past my bedtime. So we are watching kind of the grass grow here, or I guess we're kind of watching the grass die here, I guess is be more accurate. But we got news coming out in 6 minutes. I think we've gone through some pretty in-depth lessons here based on some good questions in the chat. So the more you guys participate, ask good questions, the more value you guys get from me, right? You guys get pretty much direct access here for me, especially when I don't have a specific setup that I'm in. You guys get pretty much direct access to ask good questions and get free training. So big bid down here that just got filled, 64, 65s. We're kind of in no man's land for me here. If we go back to the charts really quick, you know, when I start seeing things that kind of tempt me to do something random that wasn't really in my plan, I like to just always circle back and be like, all right, what's the big picture here? What's the location? What's going on? Tactical pause. Let me observe and orient myself, right? If you guys are not aware, there's a concept in the military called the OODA loop. Observe, and it stands for, I think it's from a World War II pilot, very successful World War II dogfight pilot. He was saying the most successful pilots in dogfights were able to go through the OODA loop process very fast. Observe, orient, decide, act. Observe what's going on, orient yourself, position yourself to successfully act upon it, make a decision and act upon it, right? So the faster you can observe the context, observe the location, orient yourself correctly, make a decision. Right now, the decision is don't touch this because we're not in any kind of key spot for me. And act, and right now, act is tactical patience, do nothing. Right? So every day I'm like approaching the market like I'm trying to set an ambush, like I'm going into a dogfight, right? Observe, orient, decide, act, right? And sometimes deciding and acting means doing nothing until you have a tactical advantage, right? If I'm a two-man scout team and I'm out looking to set an ambush and I see a patrol coming through of 100 enemy soldiers, do I want to initiate an ambush right now with me and my one buddy against 100 people going against me? Heck no. Pause. I want to not be seen, right? Do I want to go against this downtrend to try to catch a bottom? Heck no. I want to pause and not do anything. We got news coming out in 3 minutes. So we're kind of in this no man's land for me between this prior weekly low, this channel trend line low, and that channel trend line low is really darn close to those major weekly lows that we talked about down there by 6,400. So if I go to the daily chart here, we are coming really darn close to those major lows down there near 6,400, which is also really darn close to this channel low. And we're coming into Michigan consumer expectations news in 2 minutes. Riz said we need it on chart Fanatics. Let's do it. Japan is far though. Riz travels like nobody's business, man. And with the kids and everything, dude is a master. He needs a travel channel. And I met up with Riz. You would not believe like how good and well behaved his kids are, like despite late, doing all kinds of stuff, like amazing experience they're getting. And yeah, phenomenal. So we got these lows here. We got this channel trend line low. We got these major lows here around 6,400. Bit of a technical question. Isn't the daily chart continuous chart not the real price since it's synthetic back adjusted price? That is a good question. I personally, for the purposes of technical analysis, I generally look at the contract adjusted. We got news coming out in 1 minute, guys. Let's take a look at the order flow. I will also often coincide that with doing analysis on SPX and looking at similar key levels on SPX, which is not contract adjusted or anything. And sometimes I will turn off contract adjusted, but I generally leave it on because my thought process is like, if people are positioned at a certain price, they will have probably rolled over that to a similar location, right? I would say it's important to just be consistent about how you look at the levels and analysis. But yeah, for these higher time frame levels, especially past after like contract rollovers and stuff on futures, I do like to also look at key spots on like SPX. A lot of aggressive buying here on this news. And I've gone through periods also where I don't use contract adjusted. I clear my charts and do new analysis on contract rollovers. If I was purely trading price action and not order flow, I would probably want, how would the best be to say this, a little bit more specific views of levels and not contract adjusted necessarily. But for me, most of these technical analysis levels are just areas of interest where I'm like watching the volume profiles, watching the order flow around, things like that. That's where my real trading comes from. So I'm not necessarily just like looking at price action structures on key levels for my actual trade execution. It's just an area of interest for me that I then look for my real trades to look for on order flow. So when we get to those areas, I'm going to know if it's something that I want to trade or not already based on reading the order flow in real time on. But again, that's just kind of my process, how I go about things. There's not really any right or wrong answer. It's just getting the experience for yourself and how it works well for you. I'll be honest, oftentimes these big days that kind of extend an overnight move and we just kind of go one direction with little retracements or anything, just a one-way move. I often just stay cash because I don't really want to fight it. I also don't really want to chase it. That's not really in my playbooks. I do trade break and retest, especially if it's early on. But I don't like, once moves get pretty extended, until they come to a massive key area, I don't really do much with it. Is session volume profile and trading view fine for beginners? I don't personally have experience with trading view. I've never used it. I've used thinkorswim for pretty much my charting purposes forever. Even back in the day when, 2018, 2019, when I traded a lot of options and stuff, I still used Orderflow, but I literally was just using like time and sales on thinkorswim with my candle charts. So I can't really answer that, but from my knowledge, TradingView is not the best order flow platform. I don't think they have market by order data. I could be wrong, but to my knowledge, not the best platform. Now, as far as just volume profiles, something simple like that, that might be okay, but I can't really give you a solid answer because I have not used it personally. I can tell you for volume profiles, I personally use Tradeovate and mainly Sierra Chart with Denali data. Another good new platform I've seen a lot of good stuff about is Deep Charts, but I haven't personally used it just yet. I may look more into that to possibly switch from my charting on thinkorswim to maybe look at that. But I've got things that work, so I'm like, ain't broke, don't fix it. Yeah, Gavin, break and retest of ORB. ORB is a setup that I look for, although it's not, I don't look for it in the traditional sense of candle chart structure that a lot of people look for. To me, I call it more of a morning momentum opening drive type setup. And I usually look for it when there is a strong direction, kind of like today, and I have a good clear target. There's a lot of momentum directionally in the market. There are some different things I look for as far as structures on volume profiles and things like that and context overall. But yeah, it's a similar to like ORB, but trading it with order flow. That probably, could have been an opportunity today. But we've already extended the moves down so much into some key areas that I didn't personally like that setup. It wasn't really on my in-play playbooks for today. Didn't really like the location. Again, kind of looking at this 4-hour chart here, this channel that we're in, these weekly lows. If today would have opened up like in here where we closed yesterday, I would have been so down to short the break and retest of this zone targeting these weekly lows. If I was trading overnight, I would have been so down to trade that setup there. But we already extended this move down right into the open under the weekly lows, coming in between these weekly lows and this channel lows. To me, it was like shoot. But if we would have opened inside this range here yesterday and then, direction was downside, we had a strong move down, break and retest under this zone, especially in the first 30 minutes this morning, I would have been all over that. But for me here, kind of opening all the way into these lows right here, it was and news coming out at 10 a.m. It was just very coin flippy. There wasn't really enough pop off the open to the key locations that I was looking for, like a initial balance reversal. If we would have had a nicer pop to like prior day lows, that low volume node, I would have been looking for the initial balance reversal to form. But we kind of got pretty much nothing as far as pop. We opened up 930 here, we dropped, popped, dropped, didn't, I guess the one thing that I could have looked for is this anchored VWAP had been respecting, right? And so we popped into that with a lot of aggressive buying at 948. but I didn't see much confirmation there. We just had a lot of absorption and then we just dropped straight away off of it. I would have personally, for my setups, I would have liked to see more of a pop over kind of these highs here into that low volume node area around 6,500. I was looking at NQ volume profile. So yeah, around like 6,500 to 6,510. If we would have popped up there and seen that kind of absorption and reaction, again, that would have been more of like an initial balance type reversal. See that form? That would have been in play for me as well. These are the setups that I talked about in the pre-market. The one thing that I talked about is if we just kind of die off and continue this move from overnight without much pop or reversal, then likely just going to be cash for me. And that's kind of what's developed here. But a lot of traders know how to take good trades. Not many traders are able to just do nothing at the right time of doing nothing. And that is a major differentiator between the good and the great, is knowing what works, knowing when to apply, knowing when to step on the gas, and knowing when to not. And a lot of people can't do that. And if I go back to what I talked about in the pre-market, almost everyone in here said they struggled with over trading. They struggled with getting chopped up recently. They struggled with all of these things. Well, you got to be able to apply filters to when you're looking to trade. And that starts with context and location, right? So that is imperative for me to have good context and good location to filter out anything that's not that first of all. Gavin Hoffman asked, can you explain zero prints? Yeah. Zero prints to me often coincide with low volume nodes where the market moves very aggressively, and it moves so fast, so aggressively that no volume can be transacted on one side of the bid or the ask at a certain price tick. Carmine talks a lot about that. He's a great trader. So check out his, I think, stuff. He's talked a lot about that. I don't use it so much like he does and some other traders do. To me, it often just coincides with the low volume node that I'm either using as an entry or as a target, because they often, most of the time, form there, either a low volume node on the whole daily session or intraday, like price forms an intraday low volume area, which we often see on Bookmap, but maybe don't see on a daily volume profile. But it's just a spot where there was really aggressive participants, price moved really fast, and at a certain tick, no volume was transacted on one side of the bid or the ask. So if I see that, it's often a location where there is very aggressive participants, and those locations tend to be retested. And if the trending move is still strongly directional, they'll often be rejected too, is right. So let's talk about it. Let me give you a visual here. This is another good question, Gavin. Let me take a screenshot here. Since we're in a chill period here right now. So if the market is dropping, basing, right, consolidating here, we're forming like a drop base. The market is imbalanced here and moving quickly lower. So on a volume profile, we may see like a lower volume tail and then a volume build up here, kind of like that, right? And then say the market base drops quickly, right? And in this area, we see another low volume node form like here, right? Well, very often, very likely, we may see like a zero print here because this is an area where the market dropped, and then quickly, aggressively sold off lower from, right? And you may see that form as a low volume node. On a candle chart, you may see that form as a fair value gap, right? And on a DOM or something, you may see a zero print there where price moved really fast. So if price retests that, that would be a key area for those aggressive participants to defend. Because think about it, if price moves so fast through here, everybody wanted to sell here. Not many people could sell here because price moves so fast. Now everybody's looking at it. If I get an opportunity to sell here, if the market pops back into here and I can sell here again, I want to sell here again. So if it pops back into there, we may fill that zero print. So that zero print could act like a good target if we're scalping at counter trend move, or it could be a good entry point potentially, also coinciding with a fair value gap, low volume node, right? For continuation. This buying at the bottom doesn't look like a rejection of a low volume node. I'm not sure what low volume node you mean at the bottom here. This, I don't really see a low volume node. I mean, I guess, yeah, we have one here. It's a little close to price, and it's important to filter out context too, right? Price is very extended down. Yes, we might pop into this like lower volume area here. And yes, we might continue lower, but this context is important. We're coming into kind of key areas where buyers may want to defend. Yes, we may pop and reject from here. Yes, we may continue lower all day from here. But to me, the move is a bit extended for that. So it's also important if, let's talk about this as well. It's also important if that then retraces, right? So say we have this area here, right? Where we have this kind of lower volume area here. You can see it on my session volume profile here, right? And it also coincides with this prior swing low here. There's a lot of bids down here, and now we're basing and consolidating here. If we come up and recapture that and pullbacks hold above that, that would be new information right there that I'd want to pay attention to. Oh, congratulations, Gavin. You also won the Alpha Group Challenge. Great questions, great conversation here with the team. But, you know, it also is likely we could pop in here and continue to fail, continue to trend lower. Just the context and location is kind of filtering that out for me personally trying to trade that. How would I trade without Bookmap? I use footprint charts. Footprint charts are great as well. If I didn't have footprint charts either and I purely had price action, I would try to at least have a volume profile where I'm seeing volume by price, not volume by time, which is the volume charts you typically see at the bottom of candle charts. So I'd at least like to have a volume profile and a time and sales. You could filter time and sales by big orders, right? So you could look at volume profiles and coincide that with big orders hitting on the time and sales. And that is essentially what Bookmap and footprint charts are anyway. It's just visualized differently. Reagan asks, can you write down the name of the platform used for volume profiles? Tradeovate and Sierra Chart. I have a video on how to set up Tradeovate volume profiles on my YouTube channel. A lot of people use Tradeovate. I've been using Tradeovate for years. People that have personal accounts like me or prop firms accounts can all trade on Tradeovate. So, and you can use those footprint charts and volume profiles on there as well. I have no relationship with them at all whatsoever. It's just a popular platform a lot of people use. I have it myself. So if you want to use that, I have videos on my footprint chart configurations and volume profile configurations on YouTube. So I like the amount of aggressive buying that's now coming in here. We saw a lot of absorption down here at these lows, and we're seeing aggressive buying kind of recapturing. So I'm kind of interested now if buyers hold this shift in structure and we hold kind of above here. But again, not quite at the top of my list of locations just yet. We are back above the 20 EMA now. So if we get a pullback here, may become more interesting. We could fail. If this pop gets up here, we could fail again. Ideally, I would like to see a pullback down here before we rally all the way up into here. If we rally up into here and fail, this doesn't look so good as a buy. Absolutely. The speed of the tape is very important. Yes, absolutely. It's a matter of understanding effort versus reward in the market. So you want to look at the speed of the tape and how it's able to move price. Let's talk about it. So effort versus reward, right? If there is significant effort for a period of time, right? Like down here, all that negative delta effort that goes unrewarded, these sellers are getting absorbed, right? So there's a lot of effort, no reward. And so when we see the tape slowing down with a lot of effort, that's important. And when we see price easily able to reverse with minimal effort, right, then we're seeing the speed increase that direction, right? That's a very important thing, is understanding and getting a feel for it yourself, right? The amount of volume that's coming in the market one way or the other, and how it's moving price. I also really like looking at the speed of the tape on my footprint charts on 5-point range bars. It's really good for that. So you can really get a very precise and accurate view of the size of the delta from buyers and sellers and how it moves price. I'll show you guys an example of this in case some of you, right? So look at footprint charts. So when we see the size of orders increase at the lows, but price does not move lower, that's important, right? So we see high effort, low reward from sellers at a low like this. And then we see lower volume tails, right? As price quickly and fastly moves higher, that's important, speed of the tape. So sometimes we'll see high effort and high reward like this, where we see a lot of aggressive buying and a lot of aggressive price movement. Sometimes we'll see like this, right? Minimal effort at the lows, totally absorbed, and then price easily shoots higher, right? So it leaves like these B type shapes on a footprint chart for absorbing sellers at the lows, and then aggressive buyers are easily driving price higher. And the same thing is true in reverse. If we come up to a high and we see a lot of effort from buyers, doesn't move price lower, then we see tails as price quickly drops from there, right? And then we're seeing buyers getting absorbed at the highs and volume tails at the lows, right? It's kind of an intraday low volume node. So it's real time seeing the speed of tape and effort versus reward and price movement. Why use 5-point bars versus a 1 minute or a 5 minute, specifically for that speed of the tape, right? What does time have to do with where price moves? Absolutely nothing. So when I'm looking at purely just the range bars of price movement, then time is not so much of a factor. Then I'm seeing the effort versus reward equation more clearly. I don't want new bars constantly opening every time interval. That means absolutely nothing to me. I only care when there's size and speed of orders that move price, right? So there is an imbalance of aggressive participants versus how thick the tape is, right? How thick the level 2 is. So by looking at like a fixed range bar on a footprint chart, then I'm more clearly seeing the effort versus reward visualized of the market auction participants. If I'm looking at time, then it's just visual noise and it has nothing to do with the size of orders that are coming in and how price is moving. Gavin Hoffman said, I wish you did more live on CF. Good questions, man. I'll be here on Fridays. So going back to your earlier question, Gavin, about exhaustion, right? Look at how we saw a lot of aggressive buying coming into these highs, and then it kind of dwindled, right? See how aggressive buying, more aggressive buying, it kind of gets smaller, kind of gets smaller, kind of gets smaller, right? And then kind of these really small buy bubbles, those are like the last buyers, right? And then selling comes in, right? That's not saying that's going to be the reversal on the day or anything. Just right now, reading the tape of seeing aggressive buying getting smaller, right? Then likely in the near term, we're going to pull back. So we had all this aggressive buying here before. This looks pretty critical for buyers to defend this. This was the most significant effort all day from buyers, in my opinion, right? This was the most significant effort from buyers all day. So if buyers don't defend this here now, that kind of looks like a nail in the coffin for me. Effort versus reward is how I look at everything as far as reading the tape. Absorption, exhaustion. You mentioned before you look at IGV. Yeah, that is something that I was looking at a lot this year because why? Theme in the market. It's very important to understand what the key themes in the market are that are driving price direction fundamentally, right? So right now, the major theme in the market is Iran and oil, right? That has a major impact on the price direction, right? And any news that comes out related to that, anything, right? If the Iran war completely ended tomorrow, 100% done, Strait of Hormuz open, oil is likely going to plummet, S&P is likely going to rally. Right? So earlier this year, a significant theme in the market was downside pressure on the NASDAQ because the software sector was being hit really hard, was being sold off. Microsoft is still being sold off. A lot of those big tech names, software names, were getting hit really hard. Why? Because there was a major theme about fear in the market around AI disrupting tech industry, software specifically. IGV was one of the leading ETFs for software, right? So what I was looking at is if IGV finds a key bottom and starts to reverse, then likely a lot of downside pressure could be taken off the indices, specifically the NASDAQ, which is more heavily tech weighted, right? So it was important. That was a major theme in the market. So it was important to identify key support and resistance areas for. And that still is. That was a good question. These past few months, did you feel like you needed to adjust your strategy and the market's momentum? Absolutely. For me, directional plays have been lower quality, except for maybe fading the extreme highs. It's been important for me to be a lot more patient for higher time frame levels, stay out of intraday value areas. So when the market's balanced and choppy, like it often has been, even despite the downtrend, stay away from value area inside balancing areas, right? So if you look at value area high, value area low, point of control, generally inside value, inside high volume areas, low quality chop. So playing the extremes, fading the extremes, and then not looking for significant continuation, just looking for base hit scalps has been the move for me a lot of the time. I still am able to get high risk versus reward with that because I trade with order flow with very good precision, but I'm not looking for massive moves. I'm looking for kind of quicker mean reverting type moves and waiting for extremes to test higher time frames levels, and then taking base hits off extremes and higher time frame levels. I don't like how we tried to pop off this and the volume really thinned out there. Look at this pop. we tried to defend this key area that I mentioned earlier. We tried to defend this key level that I mentioned earlier where all this aggressive buying was. One, this aggressive buying failed under this absorption zone that I mentioned earlier right there. Two, we tried to pop off this and look at just the buying just died, right? So will we bottom reverse off here and continue higher? Maybe, but right now it doesn't look very good to me. The markets has also been very, very news driven. So, you know, a lot of the times we've seen like chop and grind, boom, tape bomb when Trump says something. That's difficult to trade. Congratulations, I'm Crawls. You won the 3-month TradeZella subscription. Congratulations. Do you look at London highs and lows? Yeah, open high, low and close are key levels, especially when they coincide with key levels from volume profile. I look mostly at supply and demand and where volume is transacted, where people are transacting, especially when that coincides with open, high, low, close. Daily open, high, low, and close, also session, right? So overnight Asia, London session, New York AM session, so initial balance, important session. So those important sessions, I look at the open, high, low, close. And the days, I look at the open, high, low, and close. Especially, again, when it coincides with volume and things that I'm seeing on order flow and volume profiles. This is like one of the best chats I've seen on Chart Fanatics. You guys are phenomenal. Asking good questions, participating, learning something, not just looking for trade signals. That's how you got to learn how to fish for yourself. Do you process trades every day? I don't know what you mean. I analyze every trade I take. I learned, Gavin asked, how does you different from Carmine? I learned a lot from Carmine. He's a phenomenal trader. I trade my own setups and own way. A lot of times that coincides with what he does. Sometimes, many times it's different. But definitely, you know, learned a lot from him and highly recommend him as well. Hey, Jas, welcome in. Feels a little bit like watching, I would say watching the grass grow, but it's more like watching weed killer get sprayed on the grass. You know, that fast stuff that it's like kills the grass in 10 minutes. Right? Kind of grinding lower here. Friday action can decline. I'm also very watchful of statements that come out from the White House. I think they've been posting some cryptic stuff recently, hinting at things and stuff, right? So, and the market has had major heavy reaction from things that come out. Case in point was Monday morning. Let's see. Yeah, IGV is down hard. I'm taking a look at the chart on IGV. It was recovering nicely. And let's talk about this really quick because somebody brought this up earlier and I want to bring this up. So this is why it was important for me watching IGV. Again, that was a leading theme in the market. And so when when IGV was finding major support and finding a bottom and bouncing, we saw NQ flip relatively strong. I started looking more at long scalps on NQ about a week ago because we were seeing relative strength flip back in on IGV. So when that happened, a lot of the downside pressure from the software index was taken off. I'm talking about this period here. We had a major bounce, right? For the first time in a while, took out these highs, failed, and rejected back down, right? But looking at NQ up here, we were still downtrending in this channel, but relatively speaking, every day that ES dropped, NQ was making a less aggressive drop and more aggressive bounces. And that was because we were seeing a big bounce on IGV, which was taking a lot of pressure off NQ. But now you can see IGV has tanked again, and now we're seeing relative weakness come back in strongly on NQ, which the majority of this year so far, because of that, NQ has been relatively weaker than ES. And that's important because generally speaking, it's as a short-term intraday trader, it's best to be in the leading instrument, right? You definitely reading the order flow. You want to be not in the trading the instrument that's lagging the direction that you're playing. It's you want to be with the leader, right? Because you're going to have better risk versus reward, better probability, right? If NQ is leading higher and you're trying to play a bottom reversal on ES, yeah, you might catch it, but ES is going to lag. It's going to make less of an exaggerated bounce. It's going to chop and grind. You might get chopped out. Whereas, you know, NQ is relatively stronger because of whatever theme is in the market. You play NQ, you're going to have bigger bounce, better risk versus reward, better probability, right? So as a short-term trader, especially a tape reader, very important to be playing the leading instrument. Not always, but many times. Right? Nothing is 100% in the markets, but many times. Co-Nature, is there any place you recommend order flow trading? I post a lot of free content on Instagram and YouTube. You can check that out for a starter. So if you like what you're learning here, I'd recommend checking that out if you don't already. What was the first strategy when you started trading? I've always traded like supply and demand. Even back when I started trading in like 2016, I was looking at supply and demand stuff. I was looking at fundamentals too a lot. So I started out more swing trading for years. You know, I worked in person in an office, so I couldn't day trade. But yeah, I started out more swing trading, and I would do a lot of research on fundamentals, looking for value investments essentially, and looking for basically what I thought was undervalued things, where there was potentially going to be an imbalance of supply and demand once people became aware of it. And I combined that with supply and demand technicals on charts. And then I gradually shifted like shorter and shorter time frames, like 2020-ish. Around then I started getting a lot more into looking at time and sales, order flow, and just been doing that ever since. Do you use Bookmap's heat map as a liquidity zone? I don't know what a liquidity zone means per se, but yeah, for sure. The resting orders are kind of liquidity. And so when you see a lot of orange, right, that is liquidity, passive orders resting. So yeah, I definitely look at that, especially for absorption, when it fills. To me, it doesn't mean too much. Like if I see these orders and then they pull, right? So that you got to watch out for spoofed orders. There are definitely spoofed orders all the time. And so you want to watch out for orders that are just like putting heavy size on the level 2, and you'll see it on the heat map, and then it just pulls, never actually fills anything. But when I see it hitting multiple times on the heat map and actually filling and absorbing, that's important. It can also act like a target for price movements too. So if I'm seeing a key area on the heat map that's popping up, and that also coincides with something that I want to target, like this green box here, like VWAP, then I may use that as a pretty specific target for a trade. So it depends on the context, things like that. What's your YouTube channel? They're all linked in the description here, but everything is just Matt Owen Trades. Watch out for fake accounts. There's a bajillion fake accounts pretending to be me popping up now, especially on Instagram. Mine's a verified account, Matt Owen Trades. That's it. Yeah, it's just Matt Owen Trades on Instagram and YouTube. But again, watch out for fakes. My Instagram account is verified, so anything that's not that, it's not me. Yeah, I think this market is kind of telling me to go have an early, enjoyable Friday. Right now, guys. That's what I'm seeing. What I'm seeing is have a good weekend. That's what the market's telling me. Yep. Great questions, guys. No trades for me, but hopefully you guys learned something here. I think we dropped a ton of value today. Make sure you check out Market Journal for weekly updates from the team there. Make sure you check out Chart Academy to get signed up for what's coming out on there. Yeah, I did kind of like this pop-up here, but it wasn't, you know, I could have potentially looked to take that, but we're just kind of up and down in no man's land for me. Wasn't convincing enough. But certainly price is moving lower. I'm very hesitant to fight that. Crude and VX are elevated. That's going to continue to put downside pressure. IGV is getting crushed. That's going to put downside pressure. Pretty much across the board downside pressure. Unfortunately, to me, the move became pretty extended overnight already, and just chasing extended moves much is just not in my wheelhouse. Rather just wait for something else that I like to trade. All right, guys. Thanks for tuning in today. I think we went through all the giveaways, didn't we, Anthony? Yeah, we went through all the giveaways. So congratulations to the winners today. Thanks for your participation and great questions in the chat. That helps everybody learn something. I'll see you guys next Friday. Thanks for tuning in. Make sure you stay safe. Don't hurt yourself in these conditions. Wait for your setups, key locations, key context, key confirmations. If it's not that, wait for the good setups. All right. I'll see you guys back here on Chart Fanatics Live next Friday. Thanks for tuning in. Peace.